Hi guys, Gohan here from Kame House, and today I will update you a little bit on Bitcoin. Bitcoin is approaching very important level, this high right here. This high hasn't been broken since January 2018, so there's a huge resistance zone here, strong one. On the other side there's high liquidity zone, which means big players, smart money, institutional money are waiting here to get out. They have their short orders here, and that this position is very good for them, because on the other side there's not so smart money or retail traders who are panic buying these levels, and they're panic buying it huge. They're thinking, we break this high, Bitcoin is gonna pop, Bitcoin is gonna go. So they are FOMOing in, putting a lot of money here. It's called impulsive trading, and it's very bad for your portfolio. So yeah, be very careful around 14,500 level. We might see a lot of selling coming in, a lot of distribution. Keep a close eye on this level, guys, be careful. Okay, let's take a look on hourly. Bitcoin was moving parabolic, and this move is really sustainable because smart money is trying to take profits or get out. And we see first red candle here. Nice 4% candle. Then they build this wedge out of it. Classic ABC retrace. They test this high, get rejected. Another ABC, this time to the downside. Here they test the lows, build positive structure out of it, but this time they break this high. They trap impulsive long traders, and they turn this thing immediately right back into this range. We're calling this range or sideways move, because price is moving inside this range. It looks like the market is resting here, but that's not quite so. Smart money is probing how many sellers and buyers are still in this market. They are balancing out the order books, and they are planning their next move. So if they want to go long and continue this move to the upside, or they want to take this to the downside, they are trying to put people on the other side of the trade. Okay, that's it for today. Thank you for listening. Next up is Bulma with fundamental updates.
Hey guys, what's up? It's Bulma from Kame House, and we're gonna go through some market updates and news. Today I want to talk about Ethereum. There has been some good news and there has been some bad news on Ethereum, but first I want to mention something that happened a couple days ago. Ethereum has seen a spike in transactions, jumping from 1 million to 1.2 million, and it's not that far off from all-time high, which is 1.4 million. But what is interesting, that the spike came before the price rise. So this spike corresponds to a rise in ERC20 transactions, which it may be tokens pushing the price up. Close to 1 million token transfers are now happening daily on Ethereum for more than a month now, I think. And this could mean that new continuous demand for the Ethereum network has entered the market, most likely due to decentralized finance. And that's especially the case as this rise in token transfer began during this summer, when DeFi actually started taking off, meaning from this data we can reasonably conclude that DeFi is good for Ethereum's price, perhaps because many of these tokens are chiefly traded against Ethereum. So like I mentioned before, there has been some news on Ethereum, so let's just get to it. Ethereum announced at the beginning of this week that the deposit contract should be launched by the end of this week, which was a great news for Ethereum, but unfortunately this is not the case anymore. And a couple days later they announced this. Ethereum 2.0 deposit contract release kicked back until November. And this is rather bearish. But anyway, when 2.0 comes out, be aware of scammers, guys, and don't really trust anybody. Be skeptical. I think that Ethereum is becoming as important as Bitcoin, but the price doesn't really reflect it yet though. That's it from my side for today, and I hope you're excited about Ethereum 2.0 as I am, despite this bad news. Now Piccolo will give you one of the most important trading advice. Have a good one, guys. Bye.
Hi guys, I am Piccolo and I am also one of the co-founders of the Kame House trading family. I'll be spending most of my time here as an analyst, but for the time being I am focusing my efforts on the business development side of things. So, together with Gohan and Bulma, we brainstormed on what other kind of value we could provide you guys with, now after you have heard the technical and fundamental update for this week. And together we decided to create something that we call the trading tip of the week. Basically, what we're going to do is we're going to give you one solid trading tip each week, and we'll explore it into detail to make sure that you really understand its impact so that you'll be able to add it to your trading strategy. Anyhow, this week's trading tip is one of the most fundamental and one of the most important trading tips that we can give you. And that is to never trade with funds that you can't afford to lose. And this tip is just so basic and it makes so much sense on so many levels. First of all, we at the Kame House trading family really love to put a lot of emphasis on the psychological side of trading. If you aren't a seasoned trader, then it's very likely that you haven't developed that hardened skin yet that you get after you trade for years and make a whole lot of losing trades. The market, especially the crypto market, can be a mean place, and even with lots of knowledge and experience, traders still lose all the time. And trust us, it can be devastating on your emotions. Now, if you're actually trading with the money that you need to provide for your family, or the money you need to pay the rent, then the emotional tax in case you enter into a losing streak increases exponentially. On the other hand, you also shouldn't look at your trading money as actual money, but more like some numbers on a screen. That is because it's just so much easier to detach your emotions from some numbers on a screen than from actual money. But we'll go into more detail about this in a later update. The main point here is that you simply cannot feel emotionless about money that you need for your life. That is why, and I'll say it again, never trade with money you can't afford to lose. If you can spare a lot of money this way, no problem. Trade with what you can afford. The fees for trading crypto aren't that high, and at the beginning of your trading career, you should be focusing on learning and not trying to make millions. Well, we hope that you'll be able to heed this advice from now on. As you can see by the screen, we have covered these topics and many more psychological topics in our Kame House Academy beginner series. So, if you'd like to learn more or if you have any questions for us, then make sure that you join us in our Discord group where we will provide you with further fundamental and market updates as well as free trading signals. The link to the Discord server will be in the description. Thank you for listening and join us next week as well.